Let's bring Stacy Cumberbatch up on stage now. So Stacy, I'm promoting you to panel. The last time I saw Stacy was out at a private event in Newport Beach where Senator Tim Scott spoke. I think that's the last time the two of us interacted in person, Stacy, but we've been on the phone and on Zoom calls a few times since then. And you came to me a few weeks ago with this idea you had of pitching an innovation lab in Los Angeles. It wasn't quite pitch ready, and then last night it kind of all came together. So we were
Absolutely.
pleased to add you to the end of the agenda last minute here to get you on. It's an incredible um, opportunity here for the audience on hand today and any potential investors. I think it's unlike anything else. If you've heard similar to the last presentation, oil and gas, like you don't really see very many of those. Here's another one, VC concept applied to opportunity zones. But Stacy, enough for me. I'll turn it over to you for the next 10 minutes or so here. If you'd like to dive into your presentation, please go ahead
Sounds
when you're ready.
great. And so excited to be here, Jimmy. I mean, I've been a part of the community for years now, and I'm usually in the comments, cheering people on. So this is exciting to be able to have a chance to pitch and share what we're working on. So if you can see my screen, I'll go ahead and get into presentation mode and share a
I do
bit.
see it.
I'll just give the disclaimer, of course, that this is a venture style investment. So there are risks to it, accredited investors only, but this is an exclusive preview for Jimmy's audience only. So we are aiming to meet a minimum threshold, and I'll share with you a little bit about what we're working on. Now, in opportunity zones, as with anywhere there's a venture creation problem, we want to see more businesses start and grow, particularly in opportunity zones, but there is a dearth of resources. As an investor, it might be that you're concerned about risk and you're concerned about scale. So we're going to share with you 3 ways that we're thinking of de-risking the problem and how we're going to move forward. So I'm presenting to you an innovation lab QOF that is based on the Venture Studio model, specifically, which is a venture creation engine. By investing in one company, the one company essentially builds more companies. In this instance, we're aiming for 5 companies. We do have the opportunity for a one-to-one match. So that is another way that we aim to de-risk investment into this opportunity. And even though I'm the one presenting today, this is actually a partnership between 2 companies. So you'll have the experience of 2 companies instead of just one in this lab, building companies in a scalable manner in opportunity zones, specifically here in Southern California and Los Angeles. So first, let me tell you about the one-to-one match opportunity that we have, and this is from ARPA dollars, specifically from SSBCI 2.0, which are federal dollars that were allocated to the states. The states have been operationalizing around it for the past 2 years and coming up with their guidelines. We have been working closely with them and have been developing relationships. So we intend to demonstrate an opportunity zone investment potential for a one-to-one match to show that opportunity zones can benefit businesses in California and specifically in Southern California. This federal match is intended specifically for investing in approved businesses. So this is the federal government's way of providing the equivalent of what would be a loan guarantee or risk mitigation that you see in the real estate industry. Now, Los Angeles is the perfect place to do this because we have, one, in the county, the largest number of opportunity zones in the state of California. California has close to 900 OZs. We in Southern California and LA has close to 300. And in Southern California specifically, we have the 3rd largest startup ecosystem in the nation, 4th globally. So we already have resources here. We're simply trying to pull them into the zones and for the benefit of the zones as well. A little bit about myself and my team. I have institutional experience. Specifically, I started the first 12 years of my career with traditional banks like First Republic, Bank of America, as a real estate underwriter before transitioning into the venture capital industry, where I worked with a seed stage fund and accelerator program, evaluating 1,500 deals, annually, ultimately going on to invest in 30 companies. My team also has venture studio experience and founding and exiting experience. That's just us here locally, boots on the ground. The partner that I mentioned, though I can't name them publicly on the call today, they have a team of 40, also located in an opportunity zone. They are backed by a venture capital company, and they have done this process over and over throughout the years. So there's already a process in place for developing, launching, and scaling startup companies that are venture scale in partnership with our partner. Now, Our advantage here locally is that we are already a designated innovation hub by the Governor's Office of California. This is not a name that we gave to ourselves. We are state funded, and we have been supporting entrepreneurship and startup companies in the region. Specifically around non-dilutive grant capital, we have helped startups raise close to 4 million in non-dilutive capital, which directly impacts their bottom line and increases their success. We also have a large number of partners that we work with at the federal, state, nonprofit, venture capital, and association levels that pull in all to our resources that we can add to the process here locally, in addition to our partner. Now, I mentioned we've been a part of the Opportunity Zone ecosystem since 2019. I was one of the first Opportunity Zone officers, if you will, that were placed in Southern California by philanthropy, working directly with local government, businesses, and project sponsors to explain the Opportunity Zone concept and be the advocate for it. We have done that throughout the years. We have worked with EIG, traveling to the Hill and advocating for Opportunity Zones. We've been featured in HUD for our work. We have been featured in letters to Congress, as well as other presentations that we've made throughout the years to really share out the knowledge that we can from the ground up. So this is a commitment that has happened throughout the years, and we're excited to elevate it to this next level and really put the work into a process that can benefit other businesses as well. So the challenge that we're solving for in the venture creation process is that there's a number of things that has to happen. There needs to be a need identified. There has to be product market fit. You have to hire, find co-founders, employees. You have to raise funding, et cetera. All of those are potentially, fraught with pitfalls if you don't have the right process in place. And in areas that have lack of access to capital, such as opportunity zones, or lack of access to resources, it just becomes more fraught with challenges. So we are proposing a venture studio model, which is essentially a holding company, an operational company that consolidates operations and works with the investor alongside the entrepreneur as a co-founder. So we're giving more capital and more support, essentially increasing the chances of success. Now, if you haven't heard of the venture studio concept, you would have heard of the companies it has born. This is particularly a Southern California advantage. All of the companies or venture studios on this slide are based in Southern California, and they have created companies such as Liquid Death, which has recently gone on to raise about 250 million. Companies like Picasa, Net Zero, Cooking.com, Overture. These are all venture studio created companies. And it came about because there was a process in place to create the companies and explore and launch and scale them. Essentially, what we're aiming to do is create a scalable process to create new ventures in opportunity zones, creating an economic development flywheel. We launched the venture studio, which thereby creates jobs, raises investments, hires, does talent development, and ultimately creates economic mobility within opportunity zones, of which there are plenty in Los Angeles. And if you haven't considered venture capital as an asset class, this would be the time that we encourage you to do so. One, venture capital has grown over 7x in the past several years, according to National Venture Capital Association. But more than that, in periods of run-up, the periods after that have typically been the most successful for new companies to launch and achieve a large-scale exit. We had those periods of run-up in 2021, 2022. Now would be the periods to launch these new companies. So what we're proposing is a venture studio that focuses on the built environment. Let's focus on the Southern California problems that we can export to larger areas, specifically construction, energy, sustainable infrastructure, by taking advantage of the corporate partnerships that we have here locally that would serve as first customers in those companies by identifying the risks, identifying the problems, and then we would create solutions with it around them for them so that they can then be the first customers. That's one of the other ways that we're aiming to de-risk the company building process. To give an idea of what this format would look like, the opportunity zone investment would potentially be at the private investor level, for example, that would then be matched with SSBCI funds on a one-to-one basis up to 5 million. Those funds would go into the studio would then create companies, and over a period of years, as the company grows, at the bottom, you can see that the goal is to have a more scalable company that exits, returns funds to the studio, which we then, of course, distribute to the investors. We can only do this with the support of the SSBCI investment, which I think will bolster the return profile because we'll have more capital to work with and really ensure the success of the companies. Now, the estimated timeline is the first year really establishing the studio and operations here in Los Angeles. I mentioned we have a national partner. We are bringing them here to Southern California. So this is already an economic development initiative. And the continual process of creating companies makes it scalable from in the first year, establishing the base, years 2 and 3, deploying the first set of funds across companies that are created, all deployed within the QOF timeline that's required. In years 4 through growth, for example, that would be the time frame that we're looking to support the companies with fundraising, business development, really making sure that they have the support needed to grow and scale. And again, our goal is to create the initial studio here in Los Angeles with a $10 million raise, $5 million of which is from private investments via the Opportunity Zone investment, and then the other $5 million going for the match funds from federal government. Now, there is a path to actually scaling up. So I wanted to highlight this as well, because in the investments of businesses, that's always a concern. How can you scale up the business? There is a pathway. We would essentially be creating more businesses over the period of years. And because we have this partner with the capacity to do so, we see a pathway to a full studio. The benefits for you that we really wanted to highlight, aside from the deferral and the exemption of the OZ benefits, you also get pass-through depreciation, no depreciation recaptured if held for 10 years. And something that's exclusive to businesses is that there's also an IRS Section 1202 exclusion, which means that there can be a potential for an exemption on gains even less than 10 years. So that can be an opportunity for reinvestment or simply having an exit with less than 10 years, up to certain limitations, but that's only available with businesses. So we wanted to highlight that. But also, really, you're investing in the creation of jobs and entrepreneurship and economic development in the opportunity zones, which is an area that we all want to see grow. And I'll close there. I hope that I'm close to time, Jimmy, to please share my contact information with everyone, because I do want to, discuss this opportunity more. And again, share de-risk way that folks can get involved in the venture scale opportunity. Two companies that are creating a repeatable flywheel with federal dollars behind us. So would invite anyone to contact us and we can talk offline more.
Oh, that's great, Stacy. And you are within time, and well, you're also the last presenter today until I give my concluding remarks. So if we go over time a little bit with you, it's not a big deal to me. We did have a couple questions. One of them was, may I please get Stacy's email from Clara?
Absolutely.
So Clara wants to reach out. So that was stacy@blendedimpact.com, I think.
Yep.
Yeah. So we'll get that in the chat for you
now.
in a minute here. And then we got another question here from, it doesn't say who, it's an anonymously submitted. It says, Stacy, does California provide any additional tax incentive for the Innovation Hub designation?
For the Innovation Hub, we get, for example, state funding. There aren't, at the moment, tax deferrals outside of the ones that California provides. I think in the innovation standpoint, California is very friendly for credits in terms of R&D credits, for employment tax credits, for Cal Competes credits. We are tapped into those. So we're very, familiar with the kind of resources that we can get at the county and state level. We work with those partners to try to connect those with our businesses. So we absolutely take advantage of those because those all affect the bottom line. I have not yet seen one, specifically like you mentioned for that credit, but as soon as it comes out, we'll be aware of it.
Good stuff. So Clara, I did just post Stacy's email address in the chat. You can copy paste that or click on it to send her an email and get in touch. And I'm sure she'd love to speak with you. Let's see, we got a comment here from Diaspora Impact. The question is, do you know if this model can be replicated in Maryland, DC, or Virginia, that area?
Absolutely. Obviously, you just need the expertise around the venture studio concept. That's why we partnered with a national partner to execute this here in Los Angeles. But in terms of SSBCI dollars, for example, each of the states received an allocation. They all created different guidelines to some extent around how they will use it and who they will approve. So you have to check with your state around how to secure those match dollars. We've been following that process closely and working with our state allocators to make sure that we have the relationships to go after it.
Okay, we got several more comments, and I'll just read them all to you. Sal chimes in. Sal says, "We are equally well positioned here in Nevada, Las Vegas, to do the same. Can your model be successfully replicated and scale in the Las Vegas market? Can we
Yes,
partner as sister OZ cities, LA
absolutely.
and Las Vegas,
I don't
especially
see
with
why
the
not.
upcoming Olympics on the horizon? We are big fans of the LA 84 Foundation."
We are also, I would say yes and yes to both. So happy to talk with you, Sal. And we have already started pinging our local officials about how we can get involved with the Olympics. So that is also very much a thought on our minds.
Good
Also
stuff.
excited.
Good stuff. Howard asks, do the dollars in get the gain deferral? I believe they do, right?
Yes, I mean, same as with any other opportunity zone investor. And we have, the qualified experts on hand to work out the details of this. We're working with HCVT on our tax, compliance, for example. We'd be working with NES on any type of, fund administration, for example. So all the major players would be involved in this to make sure that we're compliant.
NES, now known as JTC.
ATC, it's
They
a
were
habit.
acquired a few years ago, but I still call them NES sometimes too. But they're an industry leader, of course. Rhonda chimes in and just says, "Hi, Stacy. Great to see you again. Wonderful presentation." That's from Rhonda Adams.
Nice.
Sal chimes in with another comment. He says, "Our QOF is embedded with the Nevada GOED
Mm,
county and several municipalities already." That was just kind of a
wow.
continuation of his thought before. So it sounds like you and Sal need to talk. Um, R more, and that's all I have for his first initial is R. Do the companies need to be in California/LA, or would you work with a startup in Washington State for CRE prop tech? Sounds like he has a
Potentially,
specific company in
we
mind.
are bullish on the prop tech, asset class, for example. Obviously, everything has to be an OZ. I think, for building some scale and momentum, we'd prefer to have an anchor and our base in LA. But if we can work with partners in other, areas once we have the initial piece set up, happy to do so.
Good stuff. Sal dropped his phone number in the chat, so you've got that now, Stacy.
Oh,
Rhonda says, "Jimmy, you brought the juice today." All right, yeah, thanks, Rhonda. Clara asked me to repost the email because she got booted and came back in, so I did just resend Stacy's email to the group in the chat here. One more question just came in from Sal. This is a very popular segment here, Stacy. I told you it would be, right? Because
I'm
it's unlike
excited to
anything else.
see the excitement.
Sal says, "Why do you think so many investors are gun shy about?" He says QOZBs. I think he means operating business investments specifically, though.
I think one, real estate investors knew how to operationalize around, taking advantage of all the tax incentives, and businesses were slower to do so. But two, we really needed to show some methods to be able to accept the dollars in a way that again is scalable, that kind of mitigates risk that might be appealing to investors. So I'm hoping that by showing this, investors are interested, especially because again, we want to show the QOZB and federal dollar story that would then be approved potentially by the state of California. To have a California story behind OZs as well, I think that's just a win-win for everyone. So that's kind of how I think about it here from a Southern California perspective, but I would encourage everyone to really look at QOZBs in general because you can potentially get quite a bit of return, right, for a business investment if it's done the right way. So
Good stuff. Let's see. We got another question in the Q&A module here, anonymously submitted, so I'm not sure who it is, but this person asked, in the event of a recession, how
Mhm.
would that impact your return profile, or do you feel that this is a more resilient opportunity?
It can be more resilient, and it has shown that in the past, specifically because if we take in the capital and we're building capital efficient businesses, for example, the return profile then starts to become exponential. In a typical venture capital scale model, we're going for at least a 10x, type of investment. Now with the increase of AI into the model, it starts to become even more exponential. That would make it even more attractive in the event of a recession or an inflationary type of period because you want to see those gains in your portfolio. And that's why I wanted to include the slide on the growth of venture capital as an industry, because I think people are already starting to see that and allocating more dollars to private investments such as venture capital.
Absolutely. And I hope to see more of this in years to come too.
Mhm.
This is actually why opportunity zones were initially established, was to
Yep.
spur business activity in these zones. And it ended up becoming more of a real estate tax incentive, for better or worse. I think 90% plus of all the investment that's flowed into OZs so far has been to real estate, but I love to see these other types of investment opportunities, venture capital, backing startup businesses that can really help lift up these communities and the entrepreneurs that live within them. Let me see if I have. Yeah, Sal just chimes in more on venture studio model guidance, Stacy, and then yeah, he mentions the 1031 guys got here first. But anyways, hopefully we get an extension and a renewal of opportunity zones, and maybe we'll look back on this first 7 or 8 year period as just the very beginning. I'm hoping, and we can do more stuff like this, like what Stacy has to offer going forward. Stacy, we're out of time. Oh wait, we got one more question from Dana. I'm gonna let this question from Dana sneak in here. Does Stacy know whether Massachusetts has embraced her QOZB economic development strategies exhibited in your presentation? That's from Dana Rowan.
It might be a little beyond me to speak for the state of Massachusetts, Dana, just because I'm on the opposite side of the coast. I'm happy to look into it and get you the right resources, but we can discuss it offline. I'm familiar with where the state typically hosts it. I just don't know it all offhand.
And Sal proclaims you the goat of the day. That's from Sal.
Sal. Your audience is the best for me.
Stacy, it was great to see you. I'm from Los Angeles originally, and I've done OZ Insiders dinners throughout the course of this year in different cities, but in Dallas, in Chicago, and in Washington, D.C. But I want to get out on the West Coast for my next dinner, and you're going to be one of the guests of honor there if I do get out to Los Angeles. So keep that in mind. Hopefully in the next probably first couple of months of 2025, I'd love to get out there and do some sort of event or smaller group dinner in LA. So I'll be buzzing you shortly. Stacy, thank you so much for your support of OpportunityZones.com. Really, really appreciate it. Thank you.